name is Scott Perkins. I am the export manager with Mohawk Global Logistics based in Syracuse. We do have offices throughout. We're growing quite rapidly. We have offices in Buffalo, Rochester, Albany, Chicago, and Cleveland. We just opened up 3 or 4 months ago. We do have a contingency here. Don Quinn is our general manager, and Travis Waldrop is the account executive. And these are the guys that get out on the streets and drum up business for us. So any questions you might have regarding how we operate, what we do, any of us will be able to help you with that. We're a freight forwarder. My career began in 1986 with Mohawk, and in 1998 I switched over to the export side, the dark side. It's a lot of fun. Up to 98, I was focused more on the import part of what we do because our economy is, primarily based on importing. 85% of our revenue now is generated from imports, 15% from exports. So our focus was, in my early days, on the import side. I wish I had gotten into the exporting part of what we do earlier. I didn't because I was intimidated by it, and I think our presentation today is going to try to alleviate some of the anticipation that you might have if you want to get into the export market. So, that being said, let's proceed. Am I speaking loud enough for everybody? Can you hear me okay? Okay. I'm going to go kind of fast. I'm going to be like the FedEx guy because I've got 43 slides. Everybody know who the FedEx guy was, right? The other day I'm in the office and I was printing something, and somebody else had printed something, a younger generation person printed some, and our documents got mixed together, and I said, when I took them over to her, "You mixing your peanut butter and my chocolate?" And she was like, "What?" So you kind of have to understand the generation in the audience to which you're speaking. So we're pretty close. I think most of us on the same page with that. So with that being said, let's go forward. The role of the freight forwarder. First of all, I want to go into a little bit of detail as to why you want to export. I mean, these bullet points are pretty generic in nature. The most important to me, 95% of the world's consumers are located outside of the United States. Imagine getting into a market where you've never been before. The world's population is somewhere, Don and I were looking at it the other day on Wikipedia, and I think the population of the world is somewhere in the vicinity of 51 million? 7.5 million? Billion. Right. China, I think, is in the area of 1.3, India 1.2, somewhere in there. And the U.S. is up there. But it's 4.4%. So imagine capturing some of the international market, getting your products out to market. It increases your profitability. Most export shipments are higher in value in sales because importers in foreign countries want to amortize the cost of transportation over a larger number. Helps reduce their costs, so those orders that you're selling overseas are usually greater in value. It facilitates the company growth. Sales and exposure is all about growing the company, and it's key to exposing a company to the international market. One of the things about going last or near the end of a presentation like this is that some of the thunder that I have here has already been captured by some of the other participants. But it's a good thing because it reinforces what we're talking about. It also diversifies your portfolio. Not all economies operate on the same level. When business is good here for a company, you go through cycles where it could go up and down overseas. Their economies go up and down as well. So sometimes they'll match and offset each other, so you can create additional revenue by having exposure in the international marketplace. This was a key point for me. Just the numbers, the sheer numbers is just staggering. If you get 1% of that population outside of the U.S., look what it could do for your company. Okay. We are a highly regulated industry. The Bureau of Industry and Security, that's our God. They regulate everything that goes on as far as exports are concerned. Under that umbrella, the TSA monitors all of the air freight shipments that go out of the country, primarily focused on passenger aircraft. There are provisions now where shippers have to be known, There's certain protocols that have to be in place before you can ship your cargo on a passenger aircraft. Typically, in the transport of goods from the U.S. to foreign countries, 85% of that cargo moves on passenger aircraft. We're also regulated by the FMC, the Federal Maritime Commission Administration, and IATA is a regulatory agency worldwide for international air freight shipments. The role of the forwarder. What we do is get your product from your premise to your customer's premise, depending on the Incoterms, which we're going to go into a little bit. Terms of sale dictate where the risk and liability transfer from the seller to the buyer. So a freight forwarder, we're not asset-based. We don't own any equipment. We move goods on paper. In my early days in the career, we had a mentor that used to always go out and do these kinds of presentations and indicated to the audience that it's planes, trains, trucks, all of your carriers, they carry the cargo, but it's paperwork that moves the freight. If your paperwork's not accurate and you're trying to affect an export shipment, it's not going to move. Everybody know how many continents there are in the world? That's an easy one, right? 7? How many countries?
186.
192. And it varies depending on the resource. 192 is 196.
It changed.
It depends on where you're looking.
Last week.
Yeah. A freight forwarder has to have a relationship in these countries because all of our clients ship to different destinations depending on the terms of sale and what the shipper wants to be responsible for in getting the cargo from here to there. They have to have a relationship. You want to sell to Xiamen, China, and you want to pay for everything door to door in terms of DDP or DAP. We'll go over that in a little bit. You need to have somebody in that country representing their interests. You also, in the quoting process, need to know what the regulations are for each one of those countries prior to exporting or getting a quote to somebody, because if there are certain documents that are required, obviously there's an expense with creating those documents. You need to know that up front in order to provide a client with the information for him to get to his customer to create a quote. Okay? The role of the forwarder. There's many different types of forwarders. There's ocean forwarders, air freight forwarders, domestic forwarders. But we're a third-party logistics provider. As that provider, we dispatch shipments via asset-based carriers and books and otherwise arrange space on those shipments. Carrier types, again, include waterborne vessels, airplanes, trucks, and railroads. This looks like everything. Primary responsibilities of your forwarder. Process quotes for you to give to your clients on pro forma invoices. Everybody know the difference between a pro forma and a commercial invoice? We'll get into that in a little bit. We'll look at international sales contracts to make sure that they're workable. We'll help you. Terms of sale. Terms of sale dictate, again, the risk and liability transfer from seller to buyer. And that's in your Incoterms, and we're going to go over that. Methods of payment. I'll touch upon LCs, direct collection letters, open account. Open account, everybody loves open account. Credit card payments really are a little bit risky, as Ralph had mentioned as well. We'll go through the LC process. Forwarders will review an application for an LC so that you don't just receive a letter of credit and you're blinded by what's in it, and you have to make sure that they're workable. And that's what a forwarder will do to make sure that what's in the LC is workable and be able to process your payment. Record keeping, it's key. We're mandated by the government to keep records for 5 years. Commercial and legal documents, we review those for our clients as well. And we also file the AES filing, which is the EEI record, the export electronics information. That gets submitted to Census and State prior to an export transaction. The government says, yes, you can ship this product. Here's your ITN number, which is an internal transaction reference number. It's a verification that the steamship lines and airlines use to verify that the clearance process has been successfully completed.
So does it mean you have to be familiar with export restrictions, that is, what you can export, what you can ship, and what you cannot ship?
Yeah, we have to know. We go through everything for a client. We're familiar with regulatory requirements for the U.S. as well as foreign countries, and compliance is really a key issue with the government now. That's one of the reasons that we have agents worldwide that can help us guide what the requirements are for those countries. If you want to ship to China, you need an import license for every shipment that goes to China. Brazil, you can't just send a shipment without getting permission from the importer to send to Brazil. So we know try to know all of these, but if we don't know them, then we do have resources we can go to get that information. Okay. Again, we're familiar with all of the aspects for international trade. The only thing we don't do is find someone to sell to. Anything else in the transaction we can help you with. I'm going to back up there a little bit. Everybody familiar with an ATA carnet? A carnet is an international transport for goods moving under a carnet. It doesn't have to go through the restrictions. If you have trade shows, usually goods can move on a carnet from country to country to country and not have to go through the customs clearance process. It's an international passport for goods. Okay, processing export quotes. Some of the key elements, we'll always ask you this if you call us for a quote. You need to know the origin and destination. In terms of sale, again, how is the freight going to move? Who's responsible for what? If it's Ex Works, then it's the responsibility of the buyer to move the goods from your door as soon as it crosses the threshold onto the truck. It's your buyer's responsibility. Conversely, if you're selling DDP, where you're the exporter, you're also the importer in the foreign country. You're paying for all the duties and taxes and all that good stuff. Incoterms were revised in 2012. I think it's 2012. The Incoterms were revised. If you sell DDP now, delivery duty paid, you're paying for all the duties and taxes. If you don't exclude it in your PO, you're also paying for the VAT, value added tax, which most countries have, ranges anywhere from 18 to 25%. And it's assessed against the landed cost plus duty times that percentage. So we kind of deter a lot of our clients, actually all of them, from selling DDP, but it gets down sometimes to what the seller and the buyer in their arrangement, what it took to make the sale. Okay. We'll also mode of transport, obviously, you want a little air, ocean, truck. Pieces, weights, and dimensions. A lot of cargo, most cargo moving air freight moves on dimensional weight. There's certain formulas that the airlines use to calculate the dimensional versus the actual, they call it actual and chargeable weight. Steamship lines have the same kind of a formula for that. We'll help you create a pro forma invoice. A pro forma invoice is really a quote. Somebody from overseas has asked you to provide a quote for your product. They found you on the internet or somehow they've gotten your name and they're looking for the price on some product. One of the first things you need to do as an exporter is go in, look for the denied party screening before you do anything. If you get an inquiry on your product, you want to make sure that you're going to be able to ship to this customer. Why go through the whole process of manufacturing and doing all this, preparing this, only to find out when you go to ship it, you're not allowed to ship to this party. So a pro forma invoice is also used for a lot of companies to open up letters of credit. The client will ask you for a quote, which is the pro forma, you send it back to them, they go to their bank, they get an application, they send you a copy of the application, you give it to your forwarder to review, and then you say yes or no, whether or not it's going to be workable. They go back and then they issue the final credit off of that. The PO, sales contracts, is also a PO. That's a binding document. Once you accept that, you're bound to it. Okay? It's a document or EDI message which constitutes an offer by a prospective buyer to a prospective seller to purchase specified goods or services when accepted by the seller. Creates a binding purchase and sales contract. This document specifically identifies where title transfers. A lot of exporters are under the misconception that Incoterms dictate where title transfers. That's done in your PO. Okay. In terms of sale, Incoterms are international commercial terms. Rules are international commercial terms, a type of predefined commercial terms. This is, as Catherine mentioned, there's a lot of acronyms in our industry. If you understand the acronyms in freight forwarding, then you're 50, 60% ahead of the game. They're widely used in international commercial transactions, a series of three-letter trade terms: CIF, FOB, Ex-Works, EXW, DDP, DAP. I think in the revision in 2012, it changed. DAP would be, the shipper would be responsible for getting the goods from door to door, while the customs, taxes, and duties would be for the account of the importer. That's now DAP, changed from DDU to DAP. Still both universally accepted because there were a lot of contracts that were written under DDU terms. They're still applicable, but now the new term, if you're opening up a new contract, should be DAP, if that's the term that you're choosing. These are the most commonly Incoterms. The E terms are departure from your dock. FOB, the main carriage, is unpaid. That's just getting it to the port. FOB New York Port means your customer has agreed to take ownership of the goods at the port of departure. The C terms, the main carriage is paid by the seller. And under D terms, the seller pays for everything. Under DAP, they're paying it door to door, excluding clearance, duties, and taxes. DDP, you're paying for everything. Usually POs under DDP terms indicate excluding that, because that's a big number. We also provide trade banking services in conjunction with Ralph and his group. We agree cash in advance, and most of our exporters that deal with cash in advance, it's the most advantageous way to go. Again, consider when you're exporting, the first thing you need to do when you get a potential order is scan, and probably 6 times through the transaction from accepting the order to sending it out the door, you should be scanning for denied parties. And again, Ralph had mentioned letters of credit. If you have a $5,000 order, by the time you get done with all the banking charges, it's really not cost effective to do that. If somebody wants you to get a letter of credit for $5,000, I would question it. Letters of credit are indispensable for international transactions since they ensure that payment will be received. Again, direct collection letters pretty much accomplish the same thing as an LC. They're not as restrictive. They're still handled through the banking channels. The paperwork doesn't need to be, you can make a mistake, you cannot cross a T or dot an I, and still get paid. Where if under a letter of credit you have a mistake, just one misspelling in the LC, the documents are discrepant, the banks are going to go on approval, or the documents will on approval overseas. So you've got to make sure that it's cost effective for you to use an LC. Record keeping, importers, exporters, customs brokers, and transportation carriers are all bonded facilities, must maintain customs-related records for 5 years. In the event of an audit, you want to make sure that you're going to be able to prepare all of this paperwork for whoever's coming in to do the audit. A lot of accounting records are required to be kept for 7 years. You don't want to commingle those. You want to separate them, because if they're all together and customs goes in and does an audit and you have them available, they can look at them. Okay. Schedule B and harmonized tariff codes. Commodities throughout the world are categorized under the harmonized tariff code schedule. It's a 10-digit nomenclature that identifies the products by category. Typically, when you're exporting, you'll want to identify the first 6 numbers going to a different country, because the last 4 suffix are country specific. So if you're using a US HS code on your paperwork and sending it overseas and it gets to customs, they're going to look at it and say, well, this isn't our tariff code number. So you want to, it's not required to be on your paperwork, but it is required for us to file the SED, or if you're a self-filer, you can file your own AES information. And we'll need all 10 digits to have Census and Department of State look at that and approve it. But overseas, they only need the first 6 numbers. Schedule Bs are specific to export for certain commodities. Sometimes harmonized numbers are used for export as well, but Schedule B are really specific to export. Primarily when you have controlled items that have a specific category that the government wants to investigate and look at more closely. Power of attorney, anybody that's authorizing any customs-related documents on behalf of the exporter, that freight forwarder, customs broker has to have a power of attorney. Shipper's letter of instruction, SLI, It's a document where you complete, send to the forwarder. There are situations where you have routed transactions. Say you have an ex-work shipment starting at your customer's dock or at your dock. You'll have to provide, there's certain data elements that you'll need to provide to the forwarder that's going to be handling the shipment. And that you would give them on an SLI. If you complete an SLI and sign it at the bottom, it's a one-time power of attorney for that shipment. We also assist our clients with certificates of origin. Different countries have different formats. Israel has their own specific format. Obviously, NAFTA countries have the specific NAFTA certificate of origin. The commercial invoice is the single most important document that we get from our clients. Everything is generated off of the invoice. It's the foundation for all of our other documents, commercial packing list, certificates of origin, any other documents required for the customer's responsibility.
Some of the government programs require that U.S. composition make up more than a certain percentage of the product. You get involved at all in certifying that?
Well, that's really incumbent on the U.S. PPI, the U.S. Principal Party in Interest. We'll assist them with their going. You're talking about the regional value content versus, we go through. We'll assist our clients with that. Usually, they're more familiar with their products and what's integrated into the product, so it's difficult for us to certify it. But we'll guide them through the process to get that done effectively.
In terms of the content, it's also going to be labor, the warehouses, so it's kind of a mix, not only the product, but the labor to be put into it. So most of those government programs are going to be done on an exception basis. So say if the requirement is 51% U.S. content, if we're looking at that one, we're going to look at, say, labor, maybe do an exception, right? And that as well.
We don't have any content.
Oh, that's right.
Ah, sorry.
That's right.
But yeah, my understanding that's right. They try to include it. They don't try to exclude it. They try and make it work with their programs. If you're dealing with Exim, for example, the Exim reps that come here, they would tell you that they try and see how they can make it fit.
Yeah, that's important if you're trying to comply with a foreign trade agreement like Korea and Australia, different countries. That's an important process. Yes, sir.
In dealing with scrap or used goods that are available, how do you deal with the content?
I'm not sure.
Well, for instance, I'm in the clothes business. If I have a tractor trailer with a variety of different items that have been accumulated over a 50-mile area, and I was loaded just into an overseas container, how specific do I have to be?
Usually those kinds of goods fall under a general category like donated supplies. You don't have to be specific with, like if you have textiles in there, you have something that could be a problem overseas. Usually they're donated goods and they're classified under a generic
category.
Yes. Okay. Packing list. Not many companies provide us with a packing list, but it's really important, especially if you have a claim. And we all know how insurance underwriters like to pay claims. Typically, it's really the fault of the exporter because they haven't properly prepared paperwork. A lot of times we'll get a request for a pickup. I've got one skid, it's 500 pounds going from here to there. Well, there could be 20 cartons on the skid. So just simply identifying it as one skid, if it goes all the way through as one skid and 5 cartons fall off that skid, everybody signed for it all the way through the destination, 5 cartons are gone. Insurance companies aren't going to underwrite or pay a claim because everybody signed for one skid all the way down the line. So you need to be very specific when you're preparing your paperwork. It'll have the weight, number of skids, number of pieces. Not all countries require them. China does require them. But it's usually a mirror of the commercial invoice, excluding the pricing and including the weights and dimensions, pieces. Certificates of origin verify the origin of manufacture. We could still prepare and present a certificate of origin for goods that were imported from foreign countries on a certificate of origin for a client that's exporting goods overseas on that CO with U.S. goods combined with foreign goods. The Chamber usually does their thing with those. Certificates of origin are not required by all countries. All of your Middle Eastern countries require them. They also require documents to be localized by the local consulate for that country-specific destination, as well as the Arab Chamber of Commerce. And there's a fee for it. And it's pretty expensive. I think Oman is somewhere in the vicinity of $450 for a commercial invoice and certificate of origin and a commercial invoice. Those are usually the two. Yeah, and it usually takes about a week, so it'll delay your shipment. If you have an air freight shipment that you know is coming up, going to the Middle East, you may want to get this done in advance. Ocean freight shipments are a little different because you've got 30 days usually to get it from here to there. The documents can be couriered to destination. EEI. This is how we file our export paperwork. When I first started in this business, we used to be able to, it was called, it was the yellow paper that you filed your ex-deck on. It would be a canary yellow paper. 3 copies of it were attached to the back of your paperwork you were submitting to the airline. So the freight would get down to JFK or wherever you were departing from. They'd take off that ex-deck that was manually done and signed, attached to your paperwork, and then customs would review it. Well, by then, the freight's gone, right? So now all of the all export shipments are required to be filed electronically if it's required. It's based on a value, an FOB, $2,500 to goods plus the FOB value is the break point from when you need to file an ex-deck and when you don't. There's a certain exemption, 3037A, that you put on your paperwork to designate the exemption if there isn't a filing required. There's certain time parameters that you have to file depending on the mode of transport. The EEI information needs to be filed when the value of the commodity classified over each individual Schedule B number. Now, you could have 5 or 6 different Schedule B numbers on your shipment, and if none of them exceed $2,500, it goes out as a low-value shipment. But combined, exceeding $2,500 is when you need to file. You'll get a confirmation number from Census State. State Department wants to know where we're going, especially with goods that require a license. So they'll look at these entries as well, and they do look at them. We know they look at them. You'll get back an ITN number once it's filed and accepted by Census and State. You'll get an ITN number that goes on your transport bill of lading or airway bill, and that identifies to the carrier that the clearance process has been successfully completed. These are customs-related exports. An IE export is a type of customs entry used for imported goods rather than entry into commerce in the United States. That would be where it would come into New York and be exported immediately out. A T&E is goods that come into a certain port, went to another port, and then was exported. That's the difference with those two. Cargo insurance carriers' limits of liability. If you don't have a marine insurance policy, carriers are only under the Carriage of Goods by Sea Act to pay $500 per package identified on the bill of lading. So if you have one skid, it's got 20 cartons, you want to identify 20 cartons on your paperwork. Right? You also want to secure marine insurance. We suggest to all of our clients to secure marine insurance. It only takes one claim to be detrimental. So it's really not that expensive, but we suggest that to all of our clients for exporting goods from the U.S. With air shipments, you get paid $20 per kilogram of the actual weight on the airway bill. We spoke earlier about actual and chargeable weight. You could have a shipment that weighs actually 100 kilos, but the chargeable weight could be 400 kilos. Your airway bills can be rated at the chargeable weight, but in a claim, if you don't have insurance, you only get paid 20 cents per kilo on the actual weight. Again, there's different modes of transport: ocean freight, air freight, inland freight, railroad freight, multimodal freight, which is a combination of any of those modes above. And the rates, again, are based on a weight-volume relationship. Again, most of the airlines charge by chargeable weight. Creates more revenue for them. Transport documents, the ocean bill of lading, it's a contract of carriage issued by the ocean carrier. They're also negotiable instruments. So if you have an original bill of lading, whoever has that original bill of lading in their hands can go to the steamship line and present it, go and pick up the cargo. When you're banking documents under a letter of credit, original bills of lading are what's sent to the bank, and those are what are issued to the consignee once they've satisfied the payment to go in and allow them to go in and pick up the cargo. I'm sorry. An inland bill of lading, contract of carriage. When you create a bill of lading for a carrier to come in and pick up cargo from your facility, the original should always be kept in a file. This is a receipt that you tendered said cargo to this carrier. They've signed it. You keep the copy in your file so that if you have a claim, you need to be able to present that document saying, this is what we tendered, this is the date we tendered it, this is who signed for it. Okay? Again, an airway bill is regulated by IATA. It is a contract of carriage, but it's non-negotiable. So you could have an air freight shipment moving under a letter of credit. Your customer can go in and get the goods. But the bank documents, his clock starts when you send the documents overseas. That's when their clock starts, depending on the terms. Could be at site, 30, 60, 90 days, whatever you've negotiated with your customer. ATA carnets. It's a customs document of passage or an international passport for goods. They're good for 1 year, and you can, depending on when you apply for the carnet, you have to designate how many countries you think you're going to be going through, so you have to have an appropriate number of vouchers and counterfoils. It's really a good way to go if you have trade shows. A lot of bands use carnets to move goods around the world. They're great for trade shows as well. Compliance. We have to adhere to the Export Administration regulations that's under the Bureau of Industries and Security. We have to comply with foreign commerce regulations. We have to comply with conveyance, whether it's air or ocean. The pro forma invoice, which is the quote, customer mandates. Your customer may want some paperwork that's not required. 5 minutes, okay. And ISPM 15, a big push on the standards for wood pallets going overseas. Anything that's solid wood. Plywood doesn't comply. Plywood, it's not regulated. Pressboard, not regulated. But the infrastructure, the framing that you're using, that solid wood needs to comply. China is very strict on it. Again, you need to be compliant with the foreign commerce. Check with your customer before accepting a contract. What documents will be required by the local customs? We can help identify that for you. Most countries require general import permits. You need to ask the question. Again, Brazil and China, without pre-authorization, you can't just send something over there. Compliance assessment, that's when customs will come in and do an audit on you and be able to go through everything related to that transaction, from a copy of the PO to the check that you received for the goods. And all the documents in between. You need to be able to present that to any customs officer that's going to come in and do an audit on you. If your commodity requires a license, it would fall under the export control classification number or have one assigned to it. It's on the Commerce Control List, the CCL. It's valid for licensable commodities. An export license will be required when they pose a potential threat to national security. And it's regulated by the Bureau of Industry and Security. A foreign customs clearance requires representation at destination. If you want to sell DDP, DAP, you need to have somebody representing you in one of the 196 countries. It's usually associated with DDP, delivery duty paid. The seller pays for everything. It can be conducted under DDU terms as well, if negotiated in advance. And required documents vary by country. Check with your buyer before accepting POs what documents will be required. Forward can verify the documents. And then I just have some sample documents here. This is a pro forma invoice, really a quote to your client for him to open up either a letter of credit or to place a PO with you. It's a preliminary invoice. It's not binding like a commercial invoice. PO. sample of the commercial invoice. And again, everything is generated off of the commercial invoice that we create as a folder. We also get SLIs from our clients as well. Just make sure that everybody's on the same page, and in the event of an audit, all of that paperwork is together. Packing list, pretty straightforward. So there's a shipper's letter of instruction. It'll show the shipper constantly what the terms are, the Schedule B number will be listed in here, the reporting quantity, the value. And down in this area here, if you sign it, it's a one-time power of attorney. And again, certificate of origin, and they vary. Again, Israel has their own. CARICOM used to have an invoice. I don't think that's required anymore. And again, your NAFTA certificates are specific for Mexico and the U.S. We get NAFTA certificates all the time for shipments that are going to China or wherever. It's not a valid certificate. So, the role of the forwarder, an agent for the export of moving cargo from here to there. Familiar with all the import rules and regulations of foreign countries. If we don't know it, we have a resource that we can go and get that. We're well versed with all of the regulations. With the government, obviously. We're knowledgeable with methods of shipping and documents related to foreign trade. We're licensed by IATA and the FMC. I saw something when I was preparing this the other day. I got this little email that said, why climb out on a limb? Because the fruit's at the end. So if you want to export, take the chance. It'll prove very valuable for you. That's it.
Excuse me.
Yes.
In terms of your services, what volume of business do you think it would be cost effective for an exporter to use your services?
All of it. You need a forwarder to represent you. I mean, certain, you can't submit paperwork to the airline for one except that to the shipper. Certain procedures have to be followed. That's why we're licensed by both IATA and the FMC. We think that we're going to protect your interests. We're going to protect the interests of your client overseas. We want to make sure that everything's compliant. So it's not really, from a cost standpoint, you try to do a lot of this on your own, but from a compliance standpoint, which is really more critical to us, we would recommend using forward for initial. There are some smaller shipments you can ship out via FedEx. Something that doesn't exceed $2,500, you can send out this bullshit. It doesn't require that anything filed for that. But call us for a quote. You can make a determination on whether or not you might be able to do it more cost effectively.
What would such a quote cost, and how specific would it be? Say if we were shipping from Binghamton to Central America to El Salvador.
We don't charge any. Most forwarders won't charge a quote. And again, it's all based on that weight volume relationship. There are certain static costs. If you have a full container, that cost is set amount. Whether you put in 2,000 pounds or 20,000 pounds, it's the same
You were
price.
talking about multiple containers.
Well, it depends. Steep might mean like getting a lower weight because you're shipping multiple containers.
That's
Okay. Steep appliance, we have service contracts for 200 containers, and it really doesn't give us a big advantage. We have to, for a steep appliance, you can see on pricing, we need to go into thousands.
all right, so it wouldn't make any difference if we shipped one or a couple of
Well, if you ship one container on one house bill, you're going to have documentation fees. So you can ship 6 containers on one house bill and have the same documentation.
So the certification, you can save money on the
So
certification.
you can save on that respect. Each individual shipment, you put multiple containers on.
So if you had some ongoing thing, then this would have to be renewed periodically. Some such thing.
So take Don's talking about, if you had one shipment, you could put 5 containers on the same house bill, same bill of lading. You're going to pay for 5 containers of freight, but you're going to only have one processing fee. But if you had separate shipments that they were not going to ship together, there isn't really any cost savings on that, unless you're shipping, bigger companies that negotiate big contracts like Walmart, all these big guys that have thousands and thousands of SKUs.
And they can take the
They tell the Steve to find how much they have. Okay.
Thank you.
Thank you, guys.